guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. The United States government sanctioning of the open source code that makes of the tornado case privacy protocol might be shocking. But it's not surprising. America has been tightening its grip over the global financial system for decades ostensibly to cut down on bad behavior, but also to project power abroad. Economic sanctions, like the ones enforced by the aptly named Office of Foreign Asset Control, are a powerful weapon. The agency's website states economic and trade sanctions based on U.S. foreign policy and national security goals. It does the foreign policy or economy of the United States. Scary stuff, particularly when enforced by the user of the global reserve currency. But therein lies the rub because the more the use weapon is access to the dollar, the greater the incentive for every other country to find an alternative. One likely winner from this dynamic is Bitcoin. To see why we need to study architecture of money. Fiat currencies like the US dollar have no inherent transfer mechanism. Large payments, the banking system, and banks need government charter to operate. The symbiotic relationship enables government to not only quarter use of their money, but also access to it for the user of a reserve currency. Monetary conversion becomes a powerful weapon, arguably as decorative as bomb on bullets. Bitcoin is different because it has its own conversion designed payment system. Anyone can make payments to anyone else. With or without the involvement of a legislated intermediary, governments can still wield power over individual actions, custodians, or miners, but they can't stop the protocol of the community that runs it. Bitcoin is also political in ways that fiat currencies can never be. Along with ever strict sanctions regimes, the US has recently taken the drastic step of freezing the foreign exchange reserve of Russia and Afghanistan. Regardless of one's opinion of the legality of such actions, they drive home the point that dollar reserves are only useful so long as their owners to America good side. The United States government sanctioning of the open source code that marked up the tornado case privacy protocol may be shocking, but it's not surprising. America has been tightening its grip over the global financial system for decades ostensibly to cut down on bad behavior, but also to project power abroad. Economic sanctions, like the one enforced by the aptly named Office Foreign Access Control, are a powerful weapon. The agency particularly fiat currencies like the US dollar have no inherent transfer mechanism. Larger payments can only be made through the banking system, and banks Bitcoin is different because it has its own unconscious designed payment system. Anyone can make payments to anyone else. With or without the involvement of a licensed intermediary, government can still wield power over individual actions, custodians, or miners, by that can stop the protocol or the community that runs it. Bitcoin is also political in ways that fight along with ever strict sanction against the US has recently taken the drastic step of raising the foreign actions. Legitimately of such action they drive home. Bitcoin addressed for years what makes crypto unique is the fact that the relay protocols in question don't care, at least not in a way bank make. After all, the permission slaughter of natural networks means that anyone can do anything, including continuing that a rapper miner asserts America actions want to upset Washington, but it does mean that they could if they had to. This optionally may come in handy in a crisis. None of this means the global adoption of Bitcoin is imminent. The infrastructure remains raw and government remain cautious, in part because conservative resistance also challenge their monetary grip at home. But the more globalization refers and the more America tries to enforce her will on other countries, the greater the need for a backup plan. The relative threat to the dollar is one explanation for why America refused to pass accessible crypto regulation. Despite a thriving domestic industry, the more the normalizes Bitcoin is a store value eternally, the higher the odds that it gets adopted as reserve asset abroad. If it's good for BlackRock, then why not a central bank Countries don't need to, but they trade and trade reserve in is relative. Even and volatility, it would be risky to own too much. Just ask El Salvador. Currency refer asset a little bit would go a long way. Maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.